In this AMT Insight, I'll be exploring the key drivers behind the recent aluminium price rally and providing some thoughts on where prices might be expected to go from here. So firstly, I'm going to recap aluminium's recent price performance. So it's had a very strong couple of months since mid-December. 3-month prices on the LME have surpassed October's high of around $3,230, and it did that in mid-February, and are now in reach of 2008 all-time high for aluminium prices of $3,380 a tonne. So from the beginning of the pandemic, we've seen obviously a very strong rally over that period, the last couple of years. Prices up around 125% from April 2020 lows. So a kind of sustained rally in prices that's underlying this as well. In addition to the outright prices, we've seen nearby spreads, particularly the LME cash to 3-month backwardation, for example, exceeding $50 a tonne. That's the widest that's been since 2018, and forward spreads also very tight as well on producer hedging interest and conversely a lack of consumer hedging interest. You've also seen physical premiums at 7-year highs in Europe and at record levels in the US. So everywhere in the market at the moment, you're getting these flashing signals of tightness and of a bullish sentiment, really. So what's really driving that? Well, global aluminium supply growth dropped off very sharply over the course of last year, particularly towards the latter half of the year. And the main driver of that was China's decarbonisation drive and its dual control policies on energy usage, trying to reduce the intensity and quantity of energy use. I think in Q3 you also saw more acute Chinese energy shortages that also weighed on output. That was in Q3, but those eased into Q4. And more recently, you've seen other constraints on Chinese smelter output in Guangxi from COVID lockdowns and environmental halts around the Winter Olympics. They've also eased. So not so much an issue in terms of supply in China anymore, but really what's the focus of the market at the moment is supply constraint, particularly in Europe. So winter energy shortages in that region and high associated power prices have really affected aluminium smelter capacity. So 700,000 tonnes per year of capacity has been affected so far. CRU expect that to peak perhaps at 750,000 tonnes a year by March, but there is another 700,000 tonnes that could potentially be affected if you saw more extreme moves in power prices. So Russian supply is also a real major story at the moment in the aluminium market. It's the risk that supply of aluminium from Russia, particularly into Europe, is going to be impacted quite significantly by potential sanctions from the US and its allies if Russia does opt to invade Ukraine in a more significant way militarily. That action and those potential sanctions or fallout from that situation could also exacerbate European power issues, which plays into the point I was talking about just before about the constraint in terms of how high power prices too on domestic European aluminium output. One other bit of news as well added to that, very recently you saw Norsk Hydro cutting a 100,000 tonne a year capacity line at its Albras smelter in Brazil after a power outage. So that's just another little bit of bullish supply news that's added into the mix as well. Now the other key factor I suppose is worth pointing out is that demand has played quite a key role in underpinning the stronger prices we've seen. So last year you saw global consumption up 9% year on year and ex-China up 14%. That's again according to CRU. And really that was very much driven by the ex-China market, by the post-pandemic recovery, by this very easy stimulus environment in terms of fiscal and monetary stimulus that we found ourselves in last year. Most end-use sectors have performed pretty strongly, although transport, which is a key use sector for aluminium, did lag because of the chip shortages we saw that were constraining auto sector output. As I kind of mentioned, ex-China demand was really the key in 2021 in terms of driving prices higher and sustaining very strong demand growth. But I think this year, an optimistic point is that markets are growing optimistic that China perhaps will provide more policy support for its economy this year, kind of arrest this decline and lack of sustainability of growth that perhaps was starting to creep in last year. And that could provide a fresh impetus as well to demand this year. I guess the combination of that supply constraint and the solid demand that we are seeing has meant that we saw a very meaningful drawdown in global inventories. That was both on and off exchanges last year and kind of in the early part of this year as well. And you've seen really global shipping tightness, so tightness in the shipping market, high prices, delays, really exacerbating regional inventory pressures, notably in Europe and the US, because people haven't been able to get the material from where it is, mostly in Asia and Malaysia, specifically in the case of aluminium, to the markets that need it, where the consumption is really been the strongest. That inventory scarcity is likely to grow as an issue, really, and continue to be an issue, a growing issue. So Morgan Stanley see a further 1 million tonne global market deficit in this year, and Macquarie are forecasting 1.8 million tonne deficit. So pretty sizable deficits, really, even as a consensus view, really. And I think that Trafigura has also warned of global inventory depletion by 2024. So all in all, more deficits, pressure on inventories. From a fundamental basis, it's looking pretty positive. Now, in terms of the long term, there's some quite good optimism there for the aluminium market. Again, the focus of this, perhaps in a difference to maybe copper and nickel, where the demand is really the main focus. It's very much more about the supply side for aluminium long term. So it's the expectation that decarbonisation of global energy supply and use is really going to significantly constrain aluminium smelter capacity growth in the coming years. China in particular is important in this regard because of its very strong reliance on coal-fired power for much of its aluminium production, and also it's set this hard cap of 45 million tonnes a year for domestic aluminium production capacity, so that's yet another constraint on the potential for future growth. At the same time, you do have these green demand opportunities which are likely to buoy aluminium as well. So particularly lightweighting of electric vehicles is one that is touted quite often. So that should underpin sustained demand growth in the years ahead. Well, I think the growth rates on the demand side for aluminium will perhaps be a bit more modest. The Aluminium Association is seeing 80% growth in demand by 2050. So that's 2% as a compound annual growth rate. So relatively limited, but still relatively steady and sustained. So what does all this mean for prices? Well, I think in the short term, it's very clear that the situation of Ukraine will remain a clear source of market volatility. I think it's probably pretty likely that we'll see, just as a product of a pronounced volatility, that we'll see aluminium breach its all-time high at some point, probably in the next few weeks. And in terms of moving into Q2, though, perhaps we see some easing of tensions around Ukraine potentially, or some seasonal easing of European energy prices. That could perhaps be a little bit of a headwind. But at the same time, as we've discussed over the course of this video, we've seen sustained market deficits, very intense inventory pressures globally, and optimism perhaps that Chinese demand is going to pick up and become a more meaningful source of price support, perhaps that it wasn't last year so much. In the longer term, as we mentioned, the constraint on global aluminium smelter output is really key, and with the pressure to decarbonise global economies. And I think, just to give the counter argument, I suppose, or one of the main downside risks for aluminium, I think really you're looking at the macroeconomic situation. So it's really perhaps the outcome, whenever it might eventually hit global economies, of having rising rates that are necessary from central banks to temper the rampant inflation that we've seen in global economies. And that can expose economies and commodities demand to recession risks. But I think the timescale on this is not particularly clear. And I don't think it's probably going to be an issue for the first half of this year. We are very much at the very start of the rate hike cycle at the moment. And really it's further down the line when that rate hiking process starts to become an issue for economies that we'd start to be perhaps a bit more concerned about the price impacts on the commodities side. So overall, a pretty positive story for aluminium. Again, if you're interested or have found interesting the insights that we're putting out on a periodic basis, very much encourage you to follow AMT on LinkedIn and on social media, and that'll just keep you up to date on new insights that we're putting out from time to time. Thank you very much.